You may have noticed that the market's been doing pretty well recently. And a question that may have come to mind is, how strong has this recovery been? Well, I want to share a couple slides with you to illustrate how strong this recovery has been since the low of March 23rd. The first slide we're going to look at is showing the recovery since March 23rd, represented by the orange line. And if we look at the blue line, that is the recovery from the Great Recession back in 2009. And we can see a similar pattern, which is a good sign. Now, when we look at this next slide, it gets a little technical, so let me walk you through it. The percentage of S&P 500 stocks that are above their 50-day moving average, which is right now greater than 95%. Well, what does that mean? Well, let's read on the left-hand side. Historically, when this has happened, forward returns, meaning returns in the future, are impressive. In the past 30 years, there have been 7 unique occurrences when this has happened, and all 7 times show positive returns for 3 months, 6 months, and 12 months. If we look on the right-hand side, we see the average returns for those different time periods. The 3-month average has been 3.88, the 6-month 8.37, and the 12-month has been 15.03%. And then this last slide shows the S&P 500 50-day rate of change. So if we read, aside from coming out of the Great Depression, the past 50 days produced the highest gain in the history of the index, 39.58%. One might think the impressive performance would take away from future gains. However, in the past 50 years, whenever the 50-day rate of change was greater than 25%, and that happened in 75, 82, and 2009, the S&P was higher 3 months later by an average of 7.89%, 6 months later by an average of 12.65%, and 12 months later by an average of 20.18%. Now, I've just thrown a lot of statistics at you, but most of them have been positive. And what history tells us is when we've been in similar situations, that the market has been relatively positive going forward. Now, sometimes history doesn't repeat itself, and who knows, maybe the market could be down the next month or 6 months. However, when we look at history, there's a strong correlation there. And I want to take 2 points out of this. Number one, there's a lot of negative things going on in our world today. We're recovering from COVID. There's a protest going across the country right now. There's also an election. So these are very disruptive things, and we can get very weighed down by these different topics. The point is, these topics do not determine what the market's going to do going forward. We need to separate those two. Number two, some people might say, well, the market's up 39% since March 23rd. It can't go any higher. Well, history has shown that it can, and it has. Now, will it? We will have to wait and see. Now, the key is, as individual long-term investors, we focus on the things we can control. So, if you need help in any way, let me know. I'd be happy to look at your situation, give you a free complimentary review of your situation to make sure that you're prepared to take advantage of what may come down the road. I hope this information has been helpful to you, and I wish you the best.